Welcome to the President and CEO Focus on the Middle Market podcast series, where President and CEO founder Paul Stukel discusses middle market issues with business leaders from across the nation. Today, Paul speaks with Ken Esch, partner and Trendsetter Barometer Leader at professional services firm PwC, about the firm's most recent survey of U.S. private company executives.
Again, interesting survey that strikes me as having a lot of contradictory things in it. maybe you can set me straight here. Obviously, the Trump victory really changed everything. I think that's probably pretty safe to say, considering that, according to your survey, very few people expected him to win, and I'm guessing a lot of the survey was probably taken during the pre-election time frame. Is that fair to say? Because that obviously would change people's perspective on things.
Yeah, so we conduct the survey basically from November 1 through December 31st.
Okay.
And it was unbelievable, the change as of the election day.
Yeah.
So you're going to think about the readings of optimism, in the third quarter, they were, I think, at 39%. And that's not uncommon, for an election cycle. And we've looked back over the 20-plus years of history that we had that, leading into election, there's often, rising uncertainty around that. And then after the election, we see things, kind of level off and, trend a little bit more optimistic. But the results here in the fourth quarter of 2016 were unprecedented. And right before the election, so the days leading up to the election, our surveys were registering 38% optimism, right in line with what we saw kind of in the third quarter. After the election day, optimism shot up to 70%.
Wow.
And that leveled off, so if you blend it all together for the quarter, it jumped up to 59%. But that's just how stark of a change it was as of the election day. Unprecedented result.
That's extraordinary. And on the face of it, it makes sense in the sense that, Trump presumably will be a more pro-business guy, and all that stuff, and so it makes a lot of sense in that respect, which was actually one of the first things I wanted to ask you about, because the one of the things that struck me as being contradictory here is that your readings for private businesses being worried about legislative and regulatory pressure actually jumped considerably as well, from 38 last quarter to 48 this, which seems to me counterintuitive.
Right. And I think that's partially because, throughout the election cycle, there was a lot of focus, on the other candidate and not necessarily, policies. So when when Trump talked about tax reform, nobody really knows, exactly what that means. And when you started to look at some of the proposals that were flying around, the House blueprint, for example, which seems and is expected to be kind of a starting point, for this discussion, it was apparent that there's going to be winners and losers, with that legislation. And I think many companies, many business leaders don't know for sure whether they're going to be a winner or a loser yet. And and I think that gives pause and concern for the impact of legislative agenda going forward.
Yeah, that
Same with
you're
healthcare.
right. That makes sense. Right? Yeah, sure. Same with healthcare.
I want to repeal Obamacare, but what's the replacement? And nobody's really sure what the replacement is, and I think that gives pause for concern as well. Yeah.
That's true. I mean, it's the uncertainty, no matter which way it swings, even if it's potentially optimistic uncertainty, is always going to be troubling. Yeah, you're right, because there are going to be winners and losers. There always are. Yeah, that's a fair point.
Right.
Interesting.
So if you ask, who's in favor of, lower tax rates and less regulation, a lot of people raise their hand. Right?
Yeah.
Once you start to dig into, well, how are we going to get to a lower rate, and with large deficits, out there, what's going to be the impact to me or my company, and people start to get a lot more concerned about that.
Yeah. Yeah. No, I guess another Trump-related impact, I would think, would be on trade, which you also note in your report. Who knows what's going to happen with sort of the more belligerent, if I can use that term, that's maybe the wrong term, but certainly more aggressive perspective that Trump has on trade agreements and things like that. Obviously, TPP's out the window, and NAFTA being renegotiated theoretically. I note in the report that, again, there's kind of a mixed view of people that trade overseas. Obviously, there's concern about China, which is both Trump-related and non-Trump-related. Obviously, demand in China, because the annual revenue growth from companies selling in China went down 4.5% to 4.5% from 10%. So that's a big collapse. And there seems to be a little bit like that all over the place. I mean, what's your sense of what people are thinking right now?
Well, I think the survey participants and a lot of our clients are generally for free trade, and the impact, not only on your revenue stream but also potentially on your supply chain is very significant. And even for a company that is predominantly domestic, based and selling to domestic customers, often has exposure within their supply chain. And so while there's definitely a populist view out there that some of these trade agreements need to be torn up and rebuilt, perhaps, I think many companies are concerned about what that means to their business exactly. And whether some of those costs that may be associated with the proposals that we've heard, could really be passed along to a customer. And if even if you could try to pass some of that along to your customer, does that make your product or service non-competitive with other alternatives in the market? And that's a very significant concern, for Trendsetter companies and our clients.
Yeah, I always look at protectionism. It's a sugar rush, right? Because it's great initially, right? Because now more people have jobs and made in America and all that stuff. But that sugar rush, inevitably, if you believe in the basic laws of economics, that sugar rush is going to go away because people are going to have prices are going to go up. There's just no. People forget the second part of the equation. Costs and ultimate consumer prices are going to go up. So suddenly you're going to Walmart and you're spending 20% more on basic stuff, and you're wondering, hey, what the heck happened here? Well, Made in America has a cost.
I was talking with somebody over the weekend. And the example that I used was, the cost of like a golf shirt, a polo style shirt. And I think I may be spending the same amount, for that shirt that I spent when I was in high school. And that was a long time ago, Paul. And that's clearly because it's all outsourced to low cost manufacturing jurisdictions. So we've all kind of benefited, at least for what we pay for products, due to that free trade. And if that changes, you should probably expect that some costs are going to go up.
Yeah. You look at things like just basic consumer electronics, a TV. You can get the stunning TV for about what you'd have paid, 15 years ago for basically an entire entertainment system and maybe half your house. So So it's not surprising to me that there's a lot of uncertainty in terms of the private companies, because you just don't know how that's going to impact cost. You just really don't.
Right.
You know, and you combine that with
electronics are a great example.
Yeah. I mean, it's mind-boggling.
Great example. I mean, the pace of change in the technology is unbelievable. I mean, the TVs that we're replacing, have a fraction of the functionality and a multiple, of the cost of the new equipment.
Yeah.
It's embarrassing that you paid that much for that. Years
of
ago.
course, no, right. Or cell phones. I mean, or smartphones. Or the list goes on and on and on. I mean, we pay pennies for things that used to, only the super rich could have, right? It's
right.
And that's because of globalization. I mean, that dirty word that everyone's talking about, it's there, and it'll be interesting to see how it all. I mean, there's a lot of bluster involved, and it'll be interesting to see how it all pans out. But I guess it's understandable that private companies would be a little bit concerned about that. Even ones that sell domestically, you're right. There's an international supply chain, just the way it is.
Yeah.
And when that changes, it's gonna have a lot of impact. It seems to me, but I guess that's not terribly surprising. Another interesting, just changing gears here a little bit. Another interesting thing was the sort of relationship between the expectations for increasing headcount and the 47% of companies surveyed plan to increase their headcount, which is up from 38% a quarter ago. And then combine that with the perceived, it's clearly not perceived, it's reality, the shortage of skilled labor, and yet the wage increases expectations have gone down from 3% to 2%. Again, that strikes me as being counterintuitive. I mean, is there something I'm missing in there?
Yeah. I think there's a lot of question marks, out there with what's going on, with the labor market. We're, I think encouraged to hear that more Trendsetter companies are expected to hire, over the next year. I think that's a positive, indicator, for what's happening in the labor markets. But as you mentioned, we're not seeing, significant growth in wages. And we've seen much higher readings, from Trendsetter companies about their concern for finding qualified workers than we saw in the fourth quarter. And I think part of the reason for that is that we've got a large, pool of able body and mind, workers that are not participating, in the market today. And one of the things that I saw in that jobs report last week that I found encouraging was we did see, I think, a robust hiring report, but the unemployment rate kind of ticked up a little bit. And part of that is because more people entered the workforce. And I think that, is an encouraging sign. I look at that labor participation rate more closely than I look at the unemployment rate. And labor participation is at historic lows. Right. So that shows you that there, is capacity in the labor market, for more people to join the workforce. And I think in that last jobs report we did see, more people join. So I think that that's the, the opportunity, here, and what's probably, affecting potential wage increases down the road is that there are people on the bench, that could join the labor force, if they decided to.
Yeah, no, I'm the same way. The labor participation rate is always the most important number to me. I mean, just from the, health of the society, if nothing else. But you're right. I mean, if there is that huge reservoir of folks that are, like you say, are on the bench right now, self-imposed or not, but they're there, and when they come back in, you're right. That's going to provide a nice reservoir, which would then keep wages down. So, yeah, it's an interesting dichotomy. But I was very pleased to see that labor participation rate actually tick up again. It's been down at like early 70s levels for a long time.
Right. So. Yeah, exactly. The other thing that I was kind of keeping an eye on in the report was, just the sheer numbers of companies that are going to focus on increasing productivity and managing costs.
Right.
In 2017. And if you look into those hiring numbers, one that jumped out to me was the number of companies that were expected to reduce headcount, over the next 12 months. And that number increased to 11%, which we haven't seen since the 2008-2009 timeframe.
Wow.
And that number has been building over the last several quarters. There's a little bit of a trend or a hint out there that the companies, may be, looking to the number, their workforce as a way to manage their costs and try to increase productivity over, the next 12 months.
Right. Yeah, that is interesting. I noticed that as well, and it kind of goes to there's this myth about manufacturing, at least in the manufacturing sector, that manufacturing in the U.S. has been crushed. And the truth of the matter is, it actually has not been. It's actually grown remarkably. What's changed is what you just touched on. The productivity levels that manufacturing has created through either technology or just through better practices, better operations, whatever, they've just become lean. And they're actually, manufacturing is pretty healthy. It's producing more than it's ever produced. It's just they're not using as many workers. That's the issue. And that seems to be, again, go ahead.
The role of automation has had an enormous impact, just on the number of people it takes to build a product. And I don't think you have to look any further than a manufacturing floor at an auto company. You snap a picture from 2017 and compare that to 1987, and
right.
And you see so much more of the robotics and so many fewer people involved in that process that it's an excellent pictorial of the impact of automation just on the number of jobs in the manufacturing sector.
Yeah, and there's no sign of that slowing down. I actually worry about that. I mean, I think a lot of people should be worried about that. It's the right thing to do. I mean, from a purely business perspective, but at some point, basically robotics is going to replace a big chunk of the workforce, and we have to figure out how to deal with that.
I think the good news on that, though, is that somebody needs to design and build those robotics, right?
Right.
Yeah, so do you see maybe a little bit of a shift, from one manufacturing operation to the other, and
right.
And that's a contributing factor to why we probably see just the sheer number of manufacturing jobs continue to increase, but you'd just like to see that accelerated pace. Yeah.
I keep having this vision of because you link robotics with artificial intelligence, right? So now you're going to basically create a manufacturing facility to create robots that is then built by robots, right? So it just keeps going, right? Yeah. I don't know. We'll see. Right. We'll see. I won't be around long enough for that, so that's okay. I'm teaching my kids crochet, so they'll always have a trade. Anyway.
That's right.
Anyway, okay, so we're bumping up against our 30 minutes here. So I guess overall, as we do every time, what's your sort of overall take on the results this quarter?
Well, clearly there's a high degree, of optimism, about the future, in those fourth quarter readings. We'll be interested to see what happens in the first quarter, because we've seen the inauguration, we've seen the legislative agenda start to develop, we've seen a rollback, of some, regulation, and we've seen nominees to cabinet positions and even, the Supreme Court. So, I'm looking forward to what we see, in the first quarter, as things start to stabilize after President Trump's inauguration, and hopeful that we'll be able to continue the momentum that we've seen here, and that the readings that we see around operational spending and hiring will continue to fuel the economy.
Right. Now you used a word there, stabilize. Okay, I'm going to tell you, I'm a little skeptical about anything with respect to the Trump administration stabilizing anytime soon. It's a daily thing.
I think a lot of people voted for him because they wanted to see change and they wanted to see action.
Right.
And he's delivering that.
Please check back for future episodes of the President and CEO Focus on the Middle Market podcast series. Thanks for listening.